Hi everyone, Rocco here from WR Capital, back with another video. Episode 3 of our trading series, where we take concepts, we simplify them for the man on the street, so to show you exactly what trading is. I want to continue with our analogy of markets and lemons. And remember in episode 2 I said, how do we know how many lemons go out and in, which rate, and where do they stop? So there are 3 ways. I'm going to explain each one to you, and also the one that we use I'm going to keep for last, obviously. So, news. If some big news gets broken in the media or Trump tweets, then the market reacts. If the news is positive, let's say the job figures improved, then more lemons will go into the markets. If, for instance, Trump tweets and he starts a tariff war with Asia or with China, then more lemons will leave the markets. So in theory, this is easy. The problem is the markets really don't always react like you think they would. So for instance, with the joblessness figures, we've seen markets at record highs. It's because of other factors like quantitative easing, where liquidity is basically being pushed into the markets. So you have this detachment. News, it's not to say that news is always wrong or always right. It's sometimes a bit of a 50-50. If you take a bet against joblessness figures that lemons are going to go out and they go in, then you will lose. But that in essence is news, right, as a trading tool. The second one is fundamentals. So what is fundamentals? I mean, if you're a chartered accountant or you work in finance, you'll know fundamentals are, you look at the company's profit and loss, you look at their balance sheet, you look at the business plan, who is the CEO, and which direction they are going. So you might have heard that in the media that there's a saying that the markets are detached from reality, meaning they are detached from fundamentals. You get companies that aren't performing well, but their stock price is at an all-time high. So once again, yes, fundamentals are important. If you look at a stock like Tesla, the market is pricing in future earnings, and also Elon Musk as this flamboyant CEO, and that's why you're seeing the stock price where it is at the moment. So fundamentals, yes, are important, but also can be a bit of a 50-50. So what do we use? We use something called technical analysis. What is technical analysis? I'll post an example below, but basically it is a script or set of scripts and algorithms that don't predict where price is going, but they give you a very good idea of looking at historic data, looking at the flow and direction of money, where it's gonna go. So, technical analysis will show us, hey, lemons are starting to move out, right? So, point number 1, it shows us the direction. It also shows us through something called divergence, the speed at which it's happening. And then something called resistance or support shows us where it's likely to stop and come back the other way. So there's a few indicators that we use that makes up a trading system. So we combine that trading system with something we call our holistic teaching methods, and we have a trading concept that basically we use. So to recap, what moves markets, news, fundamentals, and what do we use to gauge price or price action is called technical analysis. In the next video, I'll show you how you can get involved, and if trading is something that you're really interested in, you can check us out www.wrcapital.co.za, or you can send me a mail, rockaustralia@wrcapital.co.za. Hope you have an awesome week ahead.